What's the takeaway? What is the lesson we should learn? What has the data taught us?
Well, the labor market is very, very tight. So yesterday we had an ADP that is very noisy, never a good predictor of NFP. But today the NFP data continues to paint this picture. You look at unemployment rate that is coming down. You look at wage is still very, very elevated at the level of annualizing 4%, which is way above the comfort zone of the central bank. You look at participation rate that has not improved in over 4 months now. So. Labor market is very, very tight, and given the broad labor shortage and also the fact that we have yet to see tightening feeding through to growth in a very meaningful way, the concept of full employment recession may well be on the cards because companies are holding labor, having learned from the lessons during the pandemic of how hard it is to hire them back. So then the question is really, as we look at a resilient labor market, is not that, does that mean the broader economy is very resilient? In the context of supply constraint, that's not a question we ask. The question that we ask is, where is the squeeze going to come from, if not from the labor market? If companies are holding labor, what does that mean for their profitability, for their earning, for their margin, which is something that we pay attention to heading into earnings season next week.
Is that enough to mean that you want to own equities rather than owning credit, rather than owning government bonds?
At this current juncture, we have a modest underweight in U.S. equities, for example, because we see the macro environment, recession coming, not quite reflected in earnings forecasts, not quite reflected in market pricing. Markets are pricing for margins to rebound when we think that it could come under pressure. Markets are pricing for earnings to accelerate in the second half of the year when we actually think that that's when the contraction gets properly registered. So we are broadly underweight U.S. equity market, but within that, we think that there is a different set of opportunities to be more granular on a sector level and also to kind of tap into some of the mega force themes, such as AI, that we previously captured through quality tilt, but we actually think that it's worthwhile breaking that out explicitly because it's so prominent in terms of being the driver of markets and also kind of growth forecast.